And so far, there's been a higher number of tax refunds and higher refunds than this time last year. The IRS just releasing its first stats for 2025. They say they've already processed 2 million more returns in 2024 and issued more than 3 million tax refunds worth $6 billion. So far, the average tax refund is around $1,900, which is 38% higher than last year's average. The IRS says the numbers will even out as more people file their taxes. So joining us now with tips ahead of the April 15th tax day deadline, Jackson Hewitt Chief Tax Officer Mark Stieber. Thank you so much for being here.
Good to be here. Very exciting time.
Yeah, it's the season. I guess the premise is it's always better to be early than late.
Always better. No good reason to wait.
Organization. So we have a series of graphics and bullet points here we want to go through. Got a lot of ground to cover. So let's start with this. Income-related documents. Gather all those documents.
They should be there by now. So if you've been storing them and your significant other's been storing them, get that envelope, get that shoebox, centralize them, because that missing document, it's a headache at tax time.
And it could cost you money.
Well, if you leave it off, you can bet that the government's going to add it back if it's good for them, won't add it back if it's a deduction good for you. So it's a one-sided street.
So last year, tax returns, other big life items that goes into not this year's box, but obviously over the last several years, you take them, you put them somewhere, and then you refer to them.
That's always a good tickler list for the thing that you're forgetting. Oh, what else did I leave off? Also, it's a good demarcation line for life changes, which drive a lot more tax issues than tax law changes, to be honest.
How many years of your tax returns should you be keeping? All
Good
of them?
question. No, you should not. And everybody comes and brags, I've got 20 years.
Yeah, right.
You really only need 3 years,
Okay.
the open years. But if you're a more sophisticated taxpayer and you got other stuff, the IRS can go back in another 3 years. So 6. Well, what's 6? 7's the number I always use. That covers the end of year,
Gotcha.
calendar year, tax year. What are you talking about? Especially for complex tax returns. 7, no more than 7. It's a disaster to keep that stuff around.
And 7 is a lucky number.
That's a good idea for the IRS.
All right, let's move on. So obviously, if you owe, there is a deadline and it's approaching somewhere in the middle of April, I've been told.
Well, here's a key that we talked about filing early. If you're filing early and you're getting a refund, you get your money. But here's a thing that many people don't know. If you file early, lock up your data with the IRS so those scammers can't get to it. But you don't have to pay until tax day, April 15th. So you get to file, find out exactly what you owe, then you can debit that account, put it on a credit card, or even mail a check in on April 15th. Filing is separate from paying.
And also, it helps against identity theft and tax fraud. You already mentioned that. It's worth mentioning again.
Yeah, if you file, you lock up your data, significant other, dependents. So if somebody bought your data, stole your data, found last year's tax return on the copier, they can't swoop in, and swooping in is happening a lot. You lock up your data. That's the number one reason to file early.
Sidebar, are you a fan of like pushing it down, kicking the can down the road, filing for an extension, or only under specific circumstances?
I can even not name a situation where it makes sense, because you still have to do the estimate. You have to work up the number, so you end up paying twice.
That's true.
To get your taxes done, and you don't get an extension of time to pay. Many people think, I'll pay this summer. You got to pay on April 15th, or you have penalty risk.
And they probably charge you interest.
They charge you interest, and you got the risk of doing it wrong, and you missed it, and then you got a real problem in the summer.
Let's talk about not necessarily changes to the tax code, but individual personal life changes. Going through a divorce, getting separated, things like that.
Those are the common ones everyone knows about. But taking care of your dependent aged parents. They may be your dependents. Starting a side hustle. IRS is looking at that real close starting this year. Got crypto activity going on. They're starting to add up those numbers for next year. So there's no small life change that you shouldn't tell your tax pro about, because it could be a deduction, it could be an overlooked deduction, and money left off the table.
It's okay to get into the nuances?
Always good to get. If you don't get into the nuances, you're going to miss stuff. So the shoebox works.
So like you mentioned it, let's talk a little bit more about it. People are doing side gigs, side hustles. Oftentimes they're getting paid by Zelle and Venmo. So that is being reported, correct, this year?
Always has been reported, but it used to have a $20,000 threshold. They changed it a couple years ago to $600. That's what they're looking at. But we have a 3-year transition. For 2024, this tax return, it's $5,000. This year, 2025, it's $2,500. But in 26, it's $600 and one transaction. So if you're selling Taylor Swift tickets, they're going to be looking at you.
All right, let's cover some more ground here. Most common scams, phishing emails. The scammers are out there. The pop-up tax preparers, stay away from them.
They are really sketchy people. They promise a refund. They don't sign it, and it's your name and your name only on there. Always remember, the IRS has you. They should have a preparer if you got a good one. His name or her name and their ID will be on there. If not, it's you alone.
And Mark, they're not going to be calling you at any time saying, hey,
the IRS,
you owe us this, you owe us that.
They never call, they never text, they never email. They do not ask you for iTunes gift cards. They do not need to verify your data. They have your data.
Final thoughts. Some people like to go filed marrying jointly, filed separately, married separately. What do you think about that?
Well, it depends. It's a good idea if you have other reasons, not financial reasons, like you may be starting to go down a divorce or one of you has legal problems. And a good pro can tell you that. But it's not a way to make better money unless you really have an extreme set of circumstances. Married filing joint is the best way to file.
Okay, well, thank you so much for being here. You can check out jacksonhewitt.com for more info. Mark Stieber, Chief Tax Officer.
Chief Tax Officer, CTO.
Thanks for being here.
Go get your money.
All right, coming up next.